Hello students, good morning and welcome back to the online class. So we'll continue with the illustration problems on consignment cost accounting. So from today's class onwards, we will solve those problems, okay, those 24 marks problem which they asked for your semester examination. In the previous classes, similar type of problem I solved, okay, the same problems but with the different figures. There were some adjustments. They have changed the adjustment and gave it for the 24 marks in the semester examination. So from today's class onwards, we'll solve the 24 marks problem which they asked in your semester examination. Okay, last 6 8 years ka question paper ka problem I am solving here. So take down the problem. So this is the 24 marks problem. They asked last 2019, 18, 15 and 14. 4 times they asked this problem. So take down this problem. Okay, so Shreyas of Bangalore consigned 10,000 kgs of ghee costing rupees 100 per kg to Omkar of Udupi at an invoice price of 120. So the cost is 100, the invoice price is 120. So the difference is load price. So what is the difference? Here the difference is rupees 20. 20 rupees is the load price. Okay, next. So who is the consigner? Shreyas is the consign because he is consigning the goods to Omkar. So Omkar is the consignee. Shreyas is the consigner. Omkar is the consignee. Shreyas spent 7,000 on freight, 3,000 on insurance. So this is the consigner's expenses. 5 containers containing 250 kgs See here, the information is given in kg, so this container is not necessary for us. 250 kg of gear destroyed in transit. So it is destroyed in transit means it is the abnormal loss. So in a transit means the consignor has to bear the loss. The insurer settled claim by paying 25,000 to Shreyas. So insurance company claimed only 25,000. So you have to calculate what is the total abnormal loss. So this 25,000 you have to take this figure to the abnormal loss account. Okay. Shreyas accepted the bill for 7 lakh as an advance payment. Here advance payment not received in cash but in the form of bill. So bill means bills receivable, where we have to enter this, record this in consignee's account. Credit side you have to write by bills receivable. If the Shreyas received the advance payment means at time you have to write by bank. If the bill is drawn for advance payment means you have to write bills receivable. Okay. Omkar spent 2000 as a rent. So Omkar is the consignee. See here 2000 as a rent. So rent you pay after you receive the goods. After you assemble the goods, you will pay the go down rent. We'll assume it as a go down rent. Okay. So 2000 is a recurring expenses because the goods has entered the gate, it has entered the go down. And 1000 as a selling expense. Selling expense after receiving the goods, then you sell the things, right? So to sell the product, what expenses you incur, that is selling expenses. So this is also a recurring. So in this problem there is no non-recurring expenses of consignee. This total 3000 is a recurring expense, and their commission is 5% on sale proceeds. So you have to calculate the commission. They reported that 5,000 kg of ghee was sold at 120. So 5,000 at 120, 3,000 at 118. So this is the sale. The agent remitted the draft for the balance. So remitted the draft means the balance payment, how much he has to do to the Shreyas, that he remitted. Remitted means given. So you have to prepare in the books of Shreyas. Now Shreyas is the consignor. You have to prepare the 4 ledger accounts. Okay. If they ask to prepare the books, the ledger accounts in the books of consignee, then 2 accounts. That is consignor Shreyas as well as commission account. If they ask you to prepare necessary ledger accounts in the books of consignor, then you have to prepare these 4 major ledger accounts. Okay. If they ask necessary ledger accounts, then you have to prepare all the ledger accounts. If they specifically states that which ledger account you have to prepare, then you prepare only that ledger account. Okay. So the first thing that you have to calculate the abnormal loss. So abnormal loss. Now you have to calculate the abnormal loss. You know how to calculate the abnormal loss. Okay. So I will give 2 minutes to calculate abnormal loss. So do it fast. Okay, check your answer. First, you have to take the cost of goods lost. So total kgs of goods lost is 250, and the cost, you have to take the cost, not the invoice price. So it is 100. Then you have to add proportionate non-recurring expense of consignor, and you know how to do this, right? So the total expenses of consignor is non-recurring. So 10,000, that is for 10,000 units. For 250, it is how much? Cross multiplication, you will get 250. And here there is no the non-recurring expenses is not given. Of consign is not given. So right. So consignica, only the recurring expenses incurred. There is no non-recurring expense, so it's nil. If you do the total, you will get the abnormal loss. So in this problem, there is no normal loss. So again, you have to follow the second format for a calculation of value of consignment stock. Okay, so do it. Again, 3 minutes to calculate the value of consignment stock. There is no normal loss, so you have to follow the abnormal loss format. Okay, check your answer. So first you have to take the cost of goods unsold. So if you get confused with the cost, you can write invoice price of goods unsold. You can write invoice price. Okay, if you write cost of goods unsold, but you have to take the invoice price only, not the cost price. If the invoice price is not given, then you can take the cost price because only cost is given in the problem. Okay, so cost will be given in the problem. So either if only cost is given, then you have to take cost itself. If the invoice price is given, then you have to take the invoice price of the consignment stock. Okay. For abnormal loss, it is a cost. For calculation of consignment stock, that is invoice price. Next, you have to add the proportionate non-recurring expenses of consignor. So cross multiplication. And there is no non-recurring expenses incurred by consignee, so nil. So the total, that is 1,750 units, 2,11,750. Next, you draw the lines for consignment in the books of Shreyas consignment account. In the books of Shreyas consignment account. Okay, first you have to take the goods sent on consignment. See here, the Shreyas has consigned 10,000 kg at 100, costing 100, but at 120. So it is two goods sent on consignment account, that is 10,000 into 120, the invoice price. Okay, next. Shreyas spent 7,000 as a freight and 3,000 on insurance. So Shreyas is the consigner. So it is two bank account. So write to bank because the expenses incurred by consigner. Next, 250 kg of ghee was destroyed. So that is abnormal loss. Right, by abnormal loss. So next. So you received 25,000 from insurance company, that you have to take it in the abnormal loss account. Accepted the bill, that you have to take in the consignee's account. Omkar spent, so expenses incurred by Omkar. So it is two Omkar account. So two expenses are rent and selling expenses. Next, commission. So commission on sale. First we'll record sale, then we calculate the commission. So next to record sale. See here, 5,000 kg at rupees 120 per kg. So by Omkar's account, because Omkar sold the goods, 5,000 into 126 lakh. Then 3,000 kg at 118. So 3,000 into 118, 3,54,000. Total 9,54,000. Okay, next to write commission. To Omkar's account commission. So on sales, so total sale 9,54,000, on that 5%. So next, there's a last one, that is consignment stock. But in this problem, the goods were consigned at invoice price, means you have to adjust the load price. Okay, so before writing consignment stock, first we'll adjust the load price on this. So this the goods sent on consignment is valued at invoice price, right? So to adjust the load price, you have to write on the credit side, that is buy goods sent on consignment account, that is load. See, goods consigned 10,000. Now, what is the load price? The difference, 100 and 120 ka difference 20. So, to 2 lakh is the load price, that is on the goods consigned. So, next load price is included in your consignment stock because you took the invoice price as the base, right? So, first we'll record the consignment stock, that is by consignment stock account, that is working note number 2. Working note number 2. Now we'll adjust the load price. So this is on the credit side, load price to be recorded on the debit side. Now what entry you have to pass? If it is goods sent on consignment, then goods sent on. If it is on the closing stock, then it is stock reserve. So write to stock reserve. That is load price on closing stock, 20 rupees. And what is the unit? The closing units is 1750. See working note number 2, 1750. So you got that 1750. 10,000 is the total invoiced, out of which 250 were lost. So you deduct 250. Then 500 units and 300 units were sold. Total 8,000 units. So 10,000 minus 250, that is loss, and 8,000, that is sale. You will get 1,000. So same number units you have taken in working note number 2. Next, balancing figure. So the figure, the balancing amount, that is transferred to profit and loss account. So now we do the total and find the difference. So the total is 13,91,000 and the difference is 95,300. So if you're done with consignment account, draw the lines for consignee account, that is Omkar's account. Next one, that is Omkar consignee account. Okay, so you have to start with the credit side, that is sale. So first one, that is to consignment. Here it is by Omkar, so it is to consignment 9,54,000. Then the expense as well as commission, it is two side. So this is by consignment. That is by consignment expenses, by consignment commission 47,700. Okay. The other two entries, that is if you have drawn the bill, then it is by bills receivable. If the advance payment has been received, then it is by bank. Here for advance payment, we drawn the bill. That is the concern has drawn the bill. So it is by bills receivable. So that is 7 lakh. Here it is. Shreyas accepted the bill for 7 lakh. Means 7 lakh is paid later, that is 3 months time plus 3 grace days. The remaining in the immediate cash. The remaining immediately paid. Difference by bank. That is the balance that to be paid. So total 9,54,000. Difference 2,03,300. 2,03,300. So if you're done with this, then you draw the lines for abnormal loss account. So either you can do abnormal loss or goods sent on consignment, okay? But you have to prepare the four major ledger accounts, but you have to start with consignment. You have to start with the consignment. The other three entries you can shuffle. Other three ledger account you can shuffle. Next, abnormal loss account. So first, to consignment. Here it is by abnormal loss, so to consignment. Then the amount has been received by the insurance company. The insurance settled the claim by paying 25,000. So when you receive it is by bank, you are receiving the money. That's the Shreyas is receiving the money. Difference transfer to P&L account. Total 25,250. Difference 250. So it is 250. Difference 250. So last ledger account, that is goods sent on consignment. So here it is two goods sent on consignment. Two goods sent on, so it is by consignment. And here it is by goods sent on consignment. So it is to consignment. The difference transfer to trading account. Total 12 lakh, difference 10 lakh. Okay, so I wind up today's class till here. So remaining illustration we'll see in the next class. Thank you.